Is it time to buy Coinbase stock? COIN or coin is the ticker. It has many of the attributes that investors love to see with potential multi-baggers. The types of stocks that could potentially go up hundreds or even thousands of percent over time. The types of stocks that can change people's life journeys. It has some of those attributes. We'll talk about what are some of those core attributes in this video. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. This is a no-hype mission-focused channel trying to find you exceptional companies and unrivaled investments. So as we look at Coinbase, once again, it has these attributes that investors love to see in the type of stocks that could potentially go up hundreds or even thousands of percent over time. One of those attributes is hyper growth. You've seen in the most recent quarter $2.5 billion in revenue versus just a couple hundred million a few quarters ago. So incredible hyper growth. You're also looking at immense profitability, $3.6 billion in profitability in the most recent year. And this is a really important data point for investors to consider, because it's one thing to have hyper growth, but if you're just burning your cash balances to fund that hyper growth, that is not sustainable. You want to find hyper growth that's sustainable. So either break even or better, generating profitability that they could potentially return to shareholders. When you have that, that is, that smells good. That sounds right. When you're talking about self-financing hyper growth, that starts getting me really interested in what's potentially going on. And so I'm seeing hyper growth, I'm seeing self-financing, and I'm seeing a cheap valuation. This could drive huge returns in the years ahead because effectively it's at a 10 times earnings multiple. Now, is that too cheap for Coinbase? Let's dive in to understand what's actually driving their business model. So what's driving their business is trading volumes. $1.7 trillion of crypto assets trading across their platform, nearly half of which is Bitcoin and Ethereum. The other half is various different other crypto assets. You can see several of them here like XRP, Solana, Cardano. And what's interesting is that despite the fact that you have various different types of investors and traders, speculators here using Coinbase, the reality is 90% of their revenue comes from retail users. 6.5 billion in revenue, transaction-related revenue from retail versus their total revenue of around 7.4 billion. Now, keep in mind, they still had 300 million from institutional investors and around 500 million in various different subscription and services revenue. That said, retail is the key driver of their business, and you can see how the historical transaction revenue per user has fared over time. With more volatility, you sort of get this FOMO aspect. Higher crypto prices really got people excited, willing to pay more, effectively willing to pay higher commissions. And that's what you saw in 2021. And those commissions are quite high, breaking the bank for a lot of retail users. Over 1% commission fees effectively for retail users. That is really, really high. You could see that in 2021, $535 billion in trading volume versus $6.5 billion in transaction fees effectively to Coinbase. So that's a 1.2, 1.3% cut that Coinbase is getting effectively on every transaction for retail users. It's really important to call this out because I believe long term this is going to be a headwind for Coinbase, potentially a race to the bottom of saying how low can your fees get, because everyone knows, you look at what happens to stocks, a lot of people think of stocks as effectively close to zero commissions in terms of the friction to trade stocks. And now looking at crypto, a 1% transaction cost is really, really high and will be a headwind potentially in the years ahead. The question is, how long does it take to play out? You can see of their institutional revenue, it's much closer to zero, $346 million versus $1.1 trillion of transaction volume for institutions. And so why is Coinbase completely in the gutter? I mean, you look at their stock price. Stock price has gotten absolutely crushed, down something like 50%, now around below $150 a share. And so I think part of it is the concern that they're losing market share. There's a lot of players out there that are looking to gobble up share, potentially offering better rates to effectively get customers. Another aspect is you're seeing a huge marketing push across the board. Crypto.com, hire Matt Damon. Let's get the Born Identity pushing, crypto. And I think that is one aspect. You see competitors pushing more, but you're also seeing a general cooling in the market as well, maybe a little freezing going on. One aspect is you see Jack Dorsey, founder of Twitter, he sold his first tweet as an NFT for something like $3 million last year. Now it's going for, maybe 1% of that. And so it does raise this question of, is it possible that a lot of these things were just so frothy, folks don't really know what the bottom is until you've had a prolonged period without radical central banker intervention. What does this market truly look like without a Federal Reserve pumping hundreds of billions of dollars in capital? And so I think you've seen record epic amounts of speculation. How does this all shake out? And we'll talk more about that in a second. But here it is, Jack, sold it for around $3 million, just effectively the screenshot, of this tweet, and now trouble getting even 1%. So the question is it possible that 99% off is still too expensive for something like this? And you're also looking at headwinds from one of their main trading assets, Bitcoin, down nearly 17% this year. So where does Coinbase stock go to from here? And so first, quick plug, if you're interested in finding potential multibaggers or you'd like to follow along with my personal financial journey, go to unrivaledinvesting.com, where I write a weekly letter. I'm looking for potential multibaggers. I'm trying to find the types of stocks that could potentially go up hundreds or even thousands of percent over time. Once again, that's unrivaledinvesting.com. Click join the journey. So why is the stock in the gutter? Where is it going to from here? Brian Armstrong, CEO, his outlook for the company this next year is saying, hey, I have no idea. That's what he's saying, because he's saying, yeah, the amount of monthly transacting users, that's going to range somewhere between 5 million and 15 million this next year. That's versus 11.4 million in 2021. He has no idea where it's going to go, and Wall Street hates uncertainty. Next up, he's saying, yeah, the amount that these folks are going to transact, it's also going to be below 2021 levels. We're just not sure. So far, we're seeing weakness relative to last year, so we're assuming effectively revenue could potentially be lower, maybe 50% higher, but also maybe 50% plus lower. They are seeing growth in their subscription and services revenue, but given that retail's like 90% of their business, retail is still a key aspect of what's driving the stock, arguably, in the years ahead. Now, despite that potentially very ambiguous, very uncertain future, management's like, up those laser eyes on those costs. Let's just keep pumping them up. Let's say, transaction expenses will be higher because of blockchain rewards. They're talking about higher sales and marketing and dramatically higher tech and development expenses, as well as general and administrative expenses, planning to hire 6,000 employees in 2022. So the potential is that they are going to burn a lot of cash next year, potentially up to $500 million loss in EBITDA. So that means maybe even close, somewhere between $500 and $1 billion in potential loss, because that's $500 million EBITDA, and that's against about $7 billion of cash. So you're looking at potentially a huge mountain cash burn. And let me talk about this for a second. So there's a huge difference between buying a stock at 10 times earnings, where you think, hey, the operations here are really, really stable over time, so I'm confident that I'm going to continue to effectively get that 10% yield. 10 times earnings equivalent to a 10% yield if management returns all cash flow to shareholders. So this is the exact opposite of that type of situation. You see Warren Buffett buy Apple when it's trading at 10 times because he was very certain, hey, people are going to keep buying those phones in the future. Therefore, this 10 times earnings multiple is reasonable. 10 times for Coinbase is very different because management themselves, they don't even know what this looks like. They're saying, hey, maybe this is immensely profitable. Maybe this is a huge cash burn. We don't know. So this is part of the reason why I think investors need to understand there's a lot of volatility here. It's uncertain how this plays out, considering this. Now, is this potentially hitting the easy button looking at Coinbase stock, because you have that cheap valuation, hyper growth, tons of free cash flow, at least historically? What's my personal take, as I look at this? I'm not slamming the easy button. I'm slamming the too hard button, because at this point, once again, going back to that Buffett buying Apple analogy, it's unclear to me what their profits look like in the next year, 2, 3, 5 years from now. It's unclear to me, will competitors take share from them? And that's arguably what you're potentially seeing now. Is it possible their whole business model gets disrupted, given that over 1%, you're seeing over 1% fees for their retail investors? And that I don't think is sustainable. So I don't like seeing an unsustainable business model, even though it trades at an optically cheap valuation with lots of free cash flow. There are just too many data points that make me concerned. I'd rather look for a company that either has a long history of compounding, or I have a greater confidence that the business is going to be very stable and trying to get that cheap multiple. Maybe not potentially the growth, because here it is. Looking at this, you don't even know if there will be growth next year. That's the whole point of what he was saying. He's like, maybe users are going to effectively transacting users are going to decline by more than 50%. He doesn't know. And so that's the part that makes this too tough. And, to take a, 10,000 foot view, I think we've lived through just a crazy period of intervention by the central banks, and I think there's a huge chance that a lot of assets dramatically re-rate effectively as the Federal Reserve considers pulling liquidity from the system. And so I am very curious where a lot of these assets ultimately find a floor. The perfect example was that Jack Dorsey NFT tweet where it's not even finding a floor at 99% down. And so that's the question of where do these assets, speculative vehicles, ultimately trade when, let's say, cash is getting pulled from the system. Because so far, the data points I've seen is that things like Bitcoin have not been the safe haven, have not been the digital gold that a lot of people thought. You had the FOMO last year that caused better trading volumes for Coinbase as people saw those assets, Bitcoin continue to appreciate. So therefore, more transaction volume, more revenue for Coinbase. What does this look like? Let's say if volumes decline significantly, as people say, I'm just not looking to trade this anymore. This has been an example where a lot of folks have talked about Bitcoin being, the safe haven, potentially a digital gold. I am not seeing that so far. I'm seeing this more as like a levered risk asset, where it's oftentimes moved in lockstep with equities, oftentimes, to a greater degree. You have the Federal Reserve pumping a lot of liquidity and equity prices start rallying, Bitcoin will do even better. You see, concerns about inflation and the Federal Reserve pulling liquidity, equity prices start declining, Bitcoin, crypto assets do even worse. So I'm curious if you have a different take on that. So far, that's the data that I'm looking at. I'd definitely love to hear a different view, because so far it doesn't look like this is the equivalent of a digital gold. It looks like there's only one true gold. So I'm looking at this and I think, this is too hard for me right now. Both the aspect of I'm not sure where the floor for a lot of these vehicles end up, and I'm ultimately not sure what the competitive dynamics look like for Coinbase in the years ahead. It's a little too tough for me, even though it has optically many of the things investors love to see with potential multi-baggers. If you enjoyed this video, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for tuning in.